Hi, everybody. This is Jeff Feingold, editor of New Hampshire Business Review. Welcome to our fourth webinar in the last couple months. It's on the residential real estate market. How is COVID-19 affecting New Hampshire's residential real estate market, which is a question that a lot of people have. Even just talking to just regular folks on the street, it's a question that comes up about what's going on, because as we all know, housing, real estate, and construction are an essential part of New Hampshire's economy, one of the key economic engines that we have. So today for our discussion, we have three excellent guests as our panelists, and I'd like to introduce them. First is Karen Mayrand, who's Senior Vice President and Director of Residential Lending at St. Mary's Bank. Karen has over 25 years experience as a mortgage professional, and she's been at St. Mary's for nine of those years, where she leads a team developing business statewide to provide creative homeownership solutions for millennials to boomers. During her tenure, she has expanded the mortgage center to include loan production offices outside of Manchester to Nashua and Concord. We also have Rachel Eames, who's owner-broker of Eames Realty Services. She's been a licensed real estate broker in the state since 1988, earned her Graduate of the Realtor Institute, or GRI, designation from the National Association of Realtors, and is also a Certified Residential Specialist, CRS, with the National Association of Realtors, which is a distinction that less than 3% of realtors in the state have, the CRS designation. And our third panelist is Ignatius McClellan, who's Managing Director of New Hampshire Housing Finance Authority's Home Ownership Division. Ignatius previously was Vice President for Public Affairs at the Northern New England Housing Investment Fund. He was Director of Fannie Mae's Northern New England Community Business Center and Program Officer at the U.S. Department of Housing and Urban Development. Before he started getting into housing, he had also practiced law for 13 years. So, but we're not going to get into those questions, Ignatius. I hope legal issues. Anyway, so I'd like to start this off. And I'd also like to remind people that we encourage you to submit questions. There's a little place on where you can see if you have any questions to send our panelists. We'd be happy to take them. And that's what they're here for, to answer them. So guys, I'd like to start this with kind of a general thing. And I guess it goes back to what I was saying in the introduction, is that what is going on in the housing market in New Hampshire right now? I mean, you hear people saying one thing and other things, but maybe we could start. Maybe Rachel, you're the one with the boots on the ground. Maybe we could start with you. What do you see right now?
So I think anytime you talk about real estate, you have to talk about time frame, right? So a lot of the statistics I have to share with folks today are through April of this year, and we'll be looking at that for a year. But my practice is showing that things are really changing in the last 3 weeks from what the statistics are going to show. So academically, if we look at the numbers, I think the scariest statistic is that we're down 40% for listings from April of 19 through April of 20. And that is, there's no other word for it, that's a plummet, right? And as we all know, we are coming out of 3.5+ years of a very tight real estate market where we didn't have enough inventory to begin with. So to be down 40% is, enormous, an enormous amount that we've lost. So that being said, in the last 2.5 or 3 weeks, I'm going to say that the market is flourishing, truly. Personal practice, again, I'm seeing multiple offers. I've had some buyers that have managed to secure the house they wanted. I've had other offers that have walked away with a tear in their eye because they were outbid by other people. And I think a lot of people came into this pandemic thinking no open houses, therefore there won't be as many multiple offers. And I think actually I thought that a little bit too at the very beginning. And yet what we're finding is showings are still going on. They're going on with social distancing, gloves, and masks. Things are being done correctly, but buyers are ready to buy and they're looking for houses. So real estate is alive and well.
Great. Anyway, Karen, what about your perspective from a bank's perspective?
Yes, right in lockstep with Rachel, our purchase application volume for at least the last 4 weeks, and maybe even greater, it far surpasses our average numbers. So we're really excited to see that. There's still fairly heavy refinance volume, but the interest that the New Hampshire market has in purchasing a new home is really incredible during this period of time. So as we know, we do have low interest rates, putting wind in our sails, so to speak. You know, monetary policy is really helping that environment, and we expect that to continue for the foreseeable future. And as the country begins to, reopen, hopefully safely, and more of laid-off workers are back to work, we really hope and expect to see the interest in the purchase market continue. And as Rachel stated, the real need is for sellers to feel more confident to list their home for sale, because we can have as many buyers as we can muster, but if those buyers do not have an adequate choice of homes to look at, then it's really hard for them to gain the confidence to move forward. Would you say, Rachel?
Yes, I would agree with that. And I think what dovetails with that, Karen, is that sellers, I know, and again, in my practice, sellers typically have to sell and then they're buying again. I mean, that's not unusual, that they're, either downsizing or upsizing. And so they need to purchase too. And I think what they're feeling is the crunch of there just hasn't been enough for them to look at. So to put their house on the market and not be able to potentially find a home they want is compounded the situation. So what I've noticed just recently, as I stated, more and more houses in the last 3 weeks are coming on the market, which is fantastic. And we'll talk about how they're selling in a little bit, I'm sure. But what I am seeing that I haven't seen for as much of for quite a while is seller to find suitable housing. So they're putting the caveat out there, okay, my house is listed, I'm for sale, but even if I had a full price offer, cash with no contingencies, I still have a contingency that seller has to find suitable housing.
Right, then that makes perfect sense in this environment.
Yes, yes.
Ignatius, I haven't forgotten about you.
No, that's okay. So just for context, at New Hampshire Housing, we work with people in New Hampshire primarily who want to buy their first home. So people who are low to moderate income. So our maximum income is around 130,000, but our average income is about 75,000, just to give context to what we do. And when I think about the market, I'm thinking about it in 3 stages, and 3 stages that have occurred rapidly in the last 2 months. So the stage 1 was pre-COVID, where you had very good interest rates, low inventory, a lot of competition for houses. And then when we got to stage 2, which was these emergency orders and congressional actions, it completely changed the home financing market for almost all of us. And so for the last couple months, we've all been dealing with what's coming out of Washington, both with the Congress, with FHA, with Fannie Mae, Freddie Mac, and trying to figure out what does that mean to home financing in New Hampshire. So you had folks in the pipeline from that pre-stage that were stuck in this phase where all of this new information was coming to us. The good news is we're 2 months through that, and I think we're more stable in terms of what's expected. And I think that's good for borrowers, because I feel badly for borrowers in that middle stage where this disruption came. But I would say most of those borrowers have worked their way through the pipeline, and I think we're in a much more stable place. And at some point, I'll tell you my thoughts on whether it's a good time for first-time home buyers to buy a home. But I would just say, right now, I think it's much more stable. We have a better understanding of what the financing market is going to be on the secondary market side, which gives us a little bit more confidence on the primary market side, which gives borrowers a little bit more stability to enter into the marketplace and the like. And we actually had to slow volume down so that we could deal with these interruptions. We're now back to opening volume up again so that we can serve folks in New Hampshire who are trying to buy a house. So I think we're in a much better place today on May 14th than we were back in May 13th when this first got declared an emergency. Right, Karen?
I would say yes.
Yeah.
Actually, we're getting a lot of questions in from our audience members, so I think I should go to those right now. Even I have a few myself, but I don't want to hog this thing. What about the idea of, is this across the board in terms of markets, starter, first time home buyers up to the luxury level? Do you see this across the whole spectrum, the activity, or are there certain areas where it's even more obvious, the activity? Maybe Rachel,
Certainly.
you pick
Happy
that up?
to chime in there. So I think obviously, other than the changes that the pandemic brings, COVID brings with how we show houses, houses that are available and on the market, we have buyers for them. And so, whether it's 100,000 or $1 million plus, the buyers are there. Now, that being said, even prior to COVID, there's market segmentations, right? And they all work differently. There was a lot of competition, as Ignatius just said, stage one prior to COVID. The homes that were the median price or lower were just, going gangbusters because there's so many more buyers for those, a lot of multiple offers. And again, as we all know, real estate is local, right? So different area of the states, median price kind of changes, and so that has to swing with where you're located, if that makes any sense. What we're seeing now, and we'll talk about kind of the houses coming on the market. I think, again, as I've already said, I think that's changed in the last few weeks, and more houses are coming on. Higher end houses, I believe, in my practice and what I've seen on the MLS, they came on during March and April, I think, as planned. I know I had a house plan to come on that was just under 900,000. They came on right on time because they felt that the pandemic really didn't impact them, because that buyer is different than the buyer that might be looking at the $250,000 or $200,000 home. A lot of the homes did sell, though. As I've already said, we had 40% less inventory come on the market year over year, April 19 to April 20. As far as the purchase side of that, I don't think, other than the high-end homes, which I don't really believe has been overly affected by COVID, there's activity. I mean, we are showing houses, we are getting multiple offers, and unfortunately, buyers are even more so experiencing that unfortunate feeling of, I didn't get the house, I was outbid. And I can tell you personally, just in the last week, I've had several offers submitted. Some were over, and they won the bid. One was not fortunate enough to win, even though they were over asking price. And then two other offers that were submitted that were at or below, but within reason of asking. One got it, one didn't. So multiple offers still happening even without open houses.
In terms of that, the bidding, because you mentioned the real drop or plummet in available inventory. So where are prices now, basically, in terms of median for I guess for an average median price house in New Hampshire? I know it varies by region, but I know on the seacoast it could be $500,000 or whatever. But what about just statewide?
On the seacoast, it's actually more than 500,000, but statewide, the median price April 2020 was $325,000, which, here's the incredible thing, that's up 11.5% from April of 2019. Wow. Now, remember, that's a full annual statistic, right? But what does that tell you? And what's going to be very interesting is we have 20% fewer pending sales in April of 20. So if we already have less closed sales in April, what's going to happen to May? Even fewer, right? Because we're down 20% already in pending. So until those houses start coming on the market, or new builds that are currently being built are ready, we're going to stop. And it's not going to be because we don't have buyers. It's going to be because we need the inventory. But geez, I mean, I've been asked this question for 4 years, and that's been the same answer. We don't have enough inventory, and now we have even less.
Yeah.
Yeah, and Jeff, I would add on the kind of the first time home buyer side, we did some surveying of our borrowers who have expressed interest in buying, and about 50% of those people, we sent a survey out to about 1,000, we got about 100 replies, about 50% said they're going to delay. And I think they're going to delay their purchase because they don't know about income, they do not know about employment. And the other statistic was about a majority said that they were probably going to dip into savings that they would normally use for their down payment. And so that's the individual decisions that I think first-time home buyers are making. And then with the credit constriction, so lenders in reaction to COVID have put additional credit overlays to manage the risk, which has meant for low and moderate income first-time home buyers, a little bit less access to mortgage capital. So when we think about the segmentation of the market at New Hampshire Housing, we're dealing with those first-time home buyers, and about half of them, at least anecdotally, have said they're going to slow it down. I will tell you, though, that's not what we're seeing in loan reservations because we offer certain programs like cash assistance that I think people need in this market. And so our loan reservation volume, now that we're opening up a little more, and Karen would be nice to hear what you have to say, our loan reservation numbers are starting to pick up again. And I think as we lessen our credit overlays and allow more people to enter the market, I think we're going to see more volume.
Right. And just to dovetail with what Ignatius is saying, we did a survey recently of about 2,000 people, not necessarily first-time home buyers, it was a mix, and 50% of those people surveyed are interested in continuing forward with their home purchase plans. So, and that makes perfect sense with what we are seeing for volume of applications coming in, whether that's a sale, a signed purchase and sale, or borrowers wanting to get pre-approved and to be ready to move forward sooner than later. Yeah. And as far as the credit tightening, I think, you know, that's a natural evolution for lenders, right? They react in one direction, and then as soon as that tightens up, the volume coming in a little bit too much, and as soon as the economy continues to reopen and there's a little bit of positive news, those credit restrictions will start to loosen.
Karen, before I go on, we're talking about these historically low rates, or I guess they're historically low. I know that the Fed fund rate is. What is a 30-year mortgage right now about in New Hampshire?
A 30-year mortgage can range right now with 3 1/8, 3 1/4. Some lenders might be a little less, and of course that interest rate does vary depending on the transaction and the credit profile of the borrower. But I would say easy enough to get 3% at this point.
What would it be about a year ago? Can you remember back that far?
I would say on average 3 3/8.
Okay.
At the low, would you agree, Ignatius? Somewhere in that vicinity?
Yeah, and I think just for folks who are interested in what's happening on the nation side, that's impacting interest rates in a positive way, is the mortgage-backed security market today is dominated by the Federal Reserve. So the Federal Reserve is doing both that stimulus that we hear about through Congress, but it's also doing the stimulus through purchasing mortgage-backed securities. So because the Fed is so involved in purchase of mortgage-backed securities, it's brought stability to a market, because remember I talked about that first stage. The secondary market too was not liquid for for a limited period of time. Now that the Fed is involved, there's more stability in terms of mortgage-backed security liquidity. And why does that matter? That results in these very low, stable interest rates, because we're now able to go take a look at the rate sheets, and we know that the market has really stabilized. So when I talked about we were in that pre-stage and what I call the what stage, and now we're in the stability stage, and I think that's what we're seeing, Karen. We're seeing much more stable daily interest rates, which give all of us confidence that we don't need to price instability into the rate. Right now we can price stability, which allows us to go lower in the rates. and frankly, still get paid for the risk, because we haven't talked about forbearance risk, but all of us think about that. So our expectation on making money on the loan sales has to be there. But even with pricing in that risk, because of the stability, the rates for borrowers are great right now, outstanding.
You know, you mentioned forbearance, Ignatius, and that's one of the questions we have from the audience here is straightforward. How is forbearance going to affect lending?
Well, that is the number one thing I think we've all been trying to figure out. So the background is that Congress passed the CARE Act, and in the CARES Act, it basically gave borrowers with federally backed mortgages the right to simply ask for a forbearance. And a forbearance means you say, I cannot pay my loan because of the impact of COVID, and your loan servicer is required to say, okay, you don't need to make your payments for 6 months and maybe even up to a year. So you don't even need to really show hardship. You just need to state hardship. So when I think about forbearance, it's in essence, a congressionally created right. And in New Hampshire, about 70% of the mortgages are federally backed, which means 70% of the borrowers in New Hampshire have access to this forbearance right. And the other 30%, which are in portfolio and the like, we did a survey with the New Hampshire Bankers Association, excuse me, and most community banks are following some type of forbearance release. In other words, while the community banks weren't required, if they have a portfolio loan, to follow the CARES Act, community banks in New Hampshire clearly are stepping up, trying to help the borrowers, help the community in this unusual time. The impact of that forbearance right has been that instability that we all feel and in lending, and the overlays of you have to have better credit, you have to, through the process, confirm your income, your assets, and your employment, much more so because the risk is there. And the challenge for folks like New Hampshire Housing, so we issue mortgage-backed securities. The federal government says borrowers who want forbearance can get it and don't have to pay. We, like other issuers of mortgage-backed securities, still need to pay the investors. And I think that's one of the things in the mortgage market that certainly has created some problems. So the good news is borrowers who have been impacted have a quick remedy for if COVID has impacted their ability to pay their mortgage. That's a good thing. The challenging thing is we're trying to manage the risk on the origination side and trying to manage the cash flow on the servicing side.
There's a related question here that just came in. I don't know, either you or Karen probably could answer this. How will forbearance affect being eligible for a loan in the future? Do you have any feelings on that? I mean, it's a good point.
It's a great question, and I'll just say that part of the congressional mandate is during the forbearance period, there's no negative impact on your credit. But Karen, what about when I come out of forbearance? What's the deal?
Right. So although there's no negative reporting of a missed payment and no effect to your credit score, there is a notation that services can make so that it is known on your credit report that this particular trade line is part of a forbearance action. Yep. So what the total fallout of that will be remains to be seen.
Yep. The other thing I would be remiss if I didn't say this. Forbearance doesn't mean forgiveness. In other words, once borrowers come out of the forbearance period, they need to work with their lender to figure out, what do I do about I haven't paid mortgages for 6 months or 12 months. And Fannie Mae just released their guidelines yesterday, and FHA released their guidelines earlier. And basically it will in some ways depend on the individual circumstance. It may be you do a lump sum, it may be you add it to your mortgage payment, it may be a second mortgage at the end. And so for any borrowers who are listening, remember, forbearance does not mean forgiveness. And I do think one of the big concerns that all of us have is when the forbearance period ends, how will borrowers handle that and how will servicers handle that? Because we don't want to upturn the real estate card and start experiencing increases in foreclosures. So.
Interesting. But I'm going to switch gears here for a little bit with this question. Who is buying homes? Are they younger empty nesters, and where are they coming from? Are they from New Hampshire or from away? Which is in quotes, as we know, as we say here in New Hampshire. So, I don't know, Rachel, is that something that you would like to take a shot at, or?
Sure, happy to. So I think even now we have buyers coming from in-state and out-of-state. In my practice personally, right now, I just put a young couple under contract in Dover, and they were coming from Western Massachusetts, and had a house to sell down there. Again, you know, they sold, they needed to buy, right? And their house went under contract in about 48 hours. That's kind of a fun story to share because we had looked at several houses, and we found one yesterday that was right for them, but they couldn't get to the property to see it. They lived 2.5 hours away. So talk about virtual. We haven't talked about that yet. So I said, geez, you know, honestly, she already has an offer. She has 5 showings today alone. This house had been on the market about 20 hours. I said, I can go to the house and I can FaceTime you through it and let's see what you think. So again, technology is wonderful. Look what we're doing right now, right? So I walked them, literally, I took them around the property on my phone, did the outside. I did the very best job I could to point out everything positive and negative. I definitely had a feel for what they were looking for, but ultimately that's the buyer's decision, right? And at the conclusion of that, I said, you know, why don't you guys take a little time to chat, call me back, just let me know what you want to do. But quite frankly, if we don't get an offer in today, you know, coming Saturday morning isn't gonna work. And I think they called me back 5 minutes later, barely, and said, yep, we want to put an offer in. And not only did they put an offer in, they wanted to, I call it play to win. We wrote an offer, play to win. We won. It's signed. They're under contract. They have never stepped foot in that house.
Wow.
Yeah.
Wow.
So
Where is this house, by the way? What part of the state?
That was in Dover, New Hampshire. Very, very nice house. List price on it was $440,000, excuse me. So they won't actually see their new home physically. I managed to get inspections lined up very quickly. So we're doing inspections Friday at 2, and that will be the first time they put their toes on that property.
Wow. I have to find out where the bathrooms are.
Yeah. but you know, there's I see positive and negative out of that, right? So here's a young couple that's buying in an area that's very competitive anyway, no matter when the market, whether it be the last 3 years or right now, it's a very competitive area. They knew what they wanted, had a good relationship. You know, I felt like they trusted me for what I was showing them and the information I was giving them. And so the positive out of that is I think they have a lovely home. I think they're going to be very happy. The negative is I'm a little stressed until they put their toes on the ground and I see the big smiles and they say, oh my gosh, it's just everything we thought it was. So, you know, with anything new, it's an emotional process anyway.
Yes.
When you add that into the mix, it's like an oh wow moment, right? It's going to be an oh wow moment for them when they step foot on that property, and it will be a stress relief for me when I see the smiles, and I know I will. But we have to wrap our minds around that. And you know, we have been doing virtual tours for a long time. I mean, probably 15 years ago, I sold a house in Canada, actually, to a couple that were in Germany. They never stepped foot on that property until they closed. And they were thrilled. But technology really makes that doable. There's just so many ways to do it, but again, you have to wrap your mind around it.
Yeah, and I just want to make a comment, and Rachel, thank you. as I've been thinking intellectually, that home is a very emotional thing. And we have to try to remember that as we go through all the technical financial things we're thinking about. And for first-time home buyers, what we're seeing is people who have worked hard for sometimes years to improve their credit and to save, and now they're being thwarted either by COVID or by increased standards and the like. And so that we've been talking more about the technical market, but there is an emotional impact on home buyers and home sellers in terms of the changes that have occurred. And I think we're all, as Rachel said, we're all in that stage of trying to figure out how do we handle not just the technical, but the human side of these as people are thinking of buying and selling. So that's a good reminder, Rachel. Thanks for that.
You're welcome.
I'm gonna move on to this other question here. Are we seeing an increased demand for new construction as a result of there being even less inventory on the market?
I'll take that one. Absolutely. And we have for, I don't know how many years now. So I don't know if it's 25 or 28% right now, but our new build starts are 25% plus too low. In other words, we are not building enough new homes. And we haven't touched on this yet, but I think this is a good segue into it. We don't have enough homes now, right? We don't have enough homes for the people that want to purchase in our market anyways, who already live in our market or who even prior to COVID wanted to move to our wonderful state. And let's face it, New Hampshire is a fantastic state to live in for so many reasons. But now what I believe is going to happen is a lot of these young professionals and otherwise that have been working in DC, New York City, or other urban areas, they're learning they can telecommute from almost anywhere literally in the world. And they're going to be looking for areas that offer, you know, room to roam, I guess is a good way to put it. And I really think New Hampshire and northern New England, particularly Maine, New Hampshire, Vermont, we're going to experience even more buyers wanting to move into our area, which just compounds exactly your question, Jeff. We don't have enough new starts now. We're definitely not going to have enough new starts in the next few years.
Yeah. So can Karen, I want to give you a chance, but I do want to talk about the rental housing production side, because I got a comment on that. But Karen, what are you seeing on the single family side?
For new construction, and these are good size, expensive homes, we are amazed at how many new applications we are receiving weekly. And the number of people that own their lot outright. And their plan was to start building, and as long as they can get a builder, they are proceeding with those plans.
Yeah,
and as far as,
I'm sorry, Greg.
No, I was just going to say, as far as new homes, you know, buying your new home directly from the builder, we've had a huge lack of demand for over a decade now. So, you know, small steps in the right direction, but still mass quantities needed. And everything that I'm reading says that's still another 10 years for us to catch up.
Yeah, just generally, Rachel and Karen have hit upon pre-COVID, New Hampshire has not been building enough homes across the whole spectrum. And the other thing I just wanted to comment on in terms of rental apartments. So one of the things New Hampshire Housing does is supports the production of new affordable rental housing across the state. We've got about 700 units. We don't do the construction. We work with developers. There's about 700 units that are in the process right now. And COVID has impacted those projects too, given the impact of increasing costs, tougher to get people to get work done, and change in the investor environment. And so while we've been talking about the single family impact, there has been an impact on the production side. So New Hampshire Housing's working with developers and with the state to see what can we do to ensure that those units actually come online, given that the average rent in New Hampshire, 2-bedroom, is about $1,350, and the vacancy rates are less than 2%. So We had this existing challenge. It's become harder for developers on the multifamily residential side. We need to figure out how do we keep the production going.
And that's another whole webinar, right? Ignatius talking about how we do that.
Oh, yeah.
Thank you for the idea.
There you go.
Here's a related question. We have been considering buying land. What does the market look like for that? Anybody have any thoughts on this?
When they
So-
say, what does the market look like in terms of availability?
Yeah, availability, I guess how the prices are. I assume they're going up the way housing prices are, but does anyone have an idea about this? Or is this out of our bailiwick?
No, I do a little bit of land. So the wonderful thing about land is that it's truly unique, right? There's only one piece of it in one place, and that's just all there is to it. So land has held its value and always will hold its value. Getting back to the development side and kind of dovetailing what Ignatius just said, you know, in New Hampshire, at least in central and southern New Hampshire, you know, greater Concord area south, what we're seeing with land is, you know, what I call the slice and dice lots, where developers could come in and, you know, buy 1,200, 1,800 feet of road frontage and just slice lots right off of it. Most of that land is gone, or landowners have put it into conservation because they want to preserve green space, which is wonderful. We need to remember what our state is and what we want to look like, I guess. But land that is available for development is holding its value as well. But a lot of those, you might get a few lots that are what I call slice and dice off the front end or the back end. But you're really talking about building, poking a road in, getting a development through the town. So I'm going to say land prices have held. I think statistically we would see that not as many people are looking to buy the piece of land and build the single family home themselves. And it's become harder and harder for developers to make a dollar on buying single lots or two lots because the costs are prohibitive. So again, another webinar, but I think there's a lot of work that can be done.
Yep.
Okay, here's an interesting question. About manufactured housing. Has the market for that been consistent with the other markets? Is the question I was asked. Is the market
Karen,
consistent?
you want to start, and then I'll.
Yeah, that would be great. There's consistent, I would say consistent inquiries for manufactured homes. Not that many of those applications actually are we finding people follow through with the purchase of the manufactured home. And my feel about that is that it has a lot to do with the lack of inventory once again. Because people might buy a manufactured home on a lot of land, but then going into a park is a completely different feel. And then what Ignatius can talk to is we've worked together on some special programs to help people with financing for manufactured homes. And I'll let Ignatius speak to how the volume was this past year.
Yeah, I mean, I would start by saying when we talk about market segments, manufactured housing is a wonderful housing option for some people in New Hampshire, and we should never forget that. Some of the manufactured housing is located on its own lot. A lot of it is located within parks. Two types of parks privately owned and parks that are resident owned. They're called resident owned communities. And the New Hampshire Community Loan Fund works with communities to buy a private park and convert it to resident ownership. And I will say during the last recession, there's no question that the values for manufactured homes got hurt the most, because when you think about when a market goes into recession, homes sometimes at the lower end get most impacted. The good news is we're not hearing that right now. I think manufactured housing, like I said, it provides a valuable, resource. And we have a loan program to help folks who are in parks. The Loan Fund has a program to help people who own manufactured housing and parks. And I think the key thing is when they can access, when homeowners who are in manufactured homes can access good conventional financing, that's good for the borrowers and good for the whole system and the like. So it's very valuable, affordable housing across New Hampshire, manufactured housing. We don't see any new restrictions that have come out in terms of manufactured housing, and good option for a lot of folks. So.
This is a question, I guess I'm going to switch gears a little bit on this, but it's all related. So it's kind of an interesting question, and I might make that definitely makes me think. Has wage growth in New Hampshire kept pace with the continued increases in home prices? If not, how does projected unemployment and reduced consumption support rising home values, especially with the prospect of rising real estate taxes?
That's quite a question.
Yeah.
I'll get us started in just in terms of what we see with people applying, for new homes. Most applicants are, I'll say, at least minor disappointed at what they are able to afford, even with very, very healthy, making very healthy wages. So to answer the first part of the question, are wages keeping up at the same pace as home price appreciation? It doesn't appear that that's the case. And it really hasn't for quite, again, I'll say well over a decade. But are we managing to help people become homeowners and do everything possible for them to be comfortable with that mortgage payment? Yes, but it's no small feat. Rachel, in showing homes to people, would you say you experience something similar?
I would say that I agree with that, and I think people. I think there's two segments there. So I think people that are coming from Massachusetts, Connecticut, New York area, where real estate's even more expensive than here. I think that they have this illusion, I'll call it, that our real estate is considerably less expensive, and I think there's two things that go on there. They find out, oh, it's not as inexpensive as they thought, but on the other hand, they do get a whole lot more for the dollar, I guess is a good way to put it. The other segment is, the people who live and work here, who were born here, raised here, have grown up in this area, and they realize, to have a house like the family home isn't as easy as it might have been when their parents purchased it 30, 40, 50 years ago. And I'm seeing, and I love it, where, we're helping families pass houses down to the next generation. And I think that's a really neat aspect. It doesn't really mean that house came to market, because it didn't. But in a lot of cases, I'm still engaging with those clients because they need help with the market analysis. That. So I think there's varying things that go on there, and I really do think it depends on where the buyers are coming from to some degree.
Yeah, and I would say that in New Hampshire generally, when you first on the rental side, there's no question that there is a very big divide between the wages that people are making and the rent that is being charged. And a lot that goes back again to the lack of inventory. So clear disconnect. New Hampshire Housing did an estimate that during the COVID crisis, about 25% of renters are really going to struggle with making their rental payments. On the home ownership side, I think there is a disconnect also in terms of what Rachel was just talking about. Two people working ought to be able to afford a home. And it's been very difficult. And I add the layer to that of student loan debt, which is what we see. And when we go to Washington with our lenders to talk to our congressional delegation, student loan debt is is a really, really, really big issue. I will say that we have at New Hampshire Housing, I got to do the plug, have some programs to help first-time home buyers, including down payment assistance and a federal mortgage credit. So there are some programs to help people, but generally speaking, a disconnect between wages and housing, both on the rental and the for sale side.
I have a question here that's specifically about condos. This is a very specific question, but maybe in general we can talk about it. Do you anticipate spring 2021 is a good time to sell a condo in a very popular community? As opposed to an unpopular community, I guess, I don't know, but you know.
Do we want to know which community?
Yeah, I know. Well, Rachel, you know,
Well, all right. So that is longer term and a little bit more difficult to predict. But I'm going to tell you that spring 2020 is a great time to sell. There's no doubt about that. If we reopen the state, and I think we also have to realize that it's not just how we reopen our state, but it's how our neighboring states reopen, and really our region reopens, right? Because we have New Hampshire relies on our neighbors for a lot of our retail sales, for instance. A lot of our restaurants rely on people coming from Massachusetts and Connecticut and New York. So all of the reopening is going to hinge on the answer to that question. So if we reopen as a region safely and as a nation to some degree, we may not see a spike in the fall, and if that's handled well and things continue to stay safe and healthy, and people begin to feel more comfortable with what's going on, then I would say spring market is typically the best market. This year, I'm going to say that I think the fall market in New Hampshire is going to be a really good market, because by the time we come through this and more people get back to work and hopefully things open safely, I think we're going to see August, September, October real estate be very, very, very good. That being said, any change in COVID and how that relates to business and business being open, unemployment, obviously everything hinges on that. So spring of 2021, I don't have that crystal ball, but I can tell you right now is definitely still a very, very good time to sell, and I suspect that fall will be as well, depending on what happens with the pandemic.
And I think following up on Rachel's comments, because we've been generally positive in this, I think because we've seen ourselves go from the good market to the what's up market to a little bit more stability, is that stability in some ways has been really helped by some of the federal money in terms of unemployment benefits, in terms of the extra cash that's put into the economy. What none of us are really able to do is to predict what's beyond even the next couple of weeks, because I think that's what we do not know. When we asked our lenders where do they see loan volume in the next 6 months, a third of them were up and 2/3 of them were down, but not a lot. And so it's really hard to predict. And then nationally, the big question is the Fed going to lose its appetite in the secondary market at some point, and what will the implications be? So I think in preparation for this webinar, I think we all agreed that it's really hard to look that far into the future. And while we're trying to do that, we're doing it not knowing what is going to happen to the sales market, what's going to happen in the interest rate market. Because of the secondary market side, the earlier comment I made about borrowers don't have to pay, but MBS and issuers have to pay investors, that could have ripple effects at some point in time. So I'm with Rachel. We know what's going on right now. Really hard to see what's going to go on. That said, I am hopeful that we get reopened and we're able to all get back to business in the full, on a more stable place that we were before this.
This is also in the more specific question category. And Karen, I think this is probably for you. So, my husband and I need to fix our basement as it is failing. We have equity in our home. I recently stopped working to help my kids with school. I am receiving unemployment. Can we still apply to refinance so we can fix what we need to before the house collapses? That sounds bad. If this is an option, what loan would be best to pursue?
Well, you absolutely can still apply. And probably it sounds like from the question that the most probable loan type could be a renovation loan. So you can obtain your estimates from builders and determine what the cost is going to be to repair the home. The appraisal will be completed based on the home value once all the repairs have been made, and that may help qualify, for the amount of money that you need. That would be my suggestion, is a good place to start.
Okay. This is for Ignatius. Are NHHFA preferred products coming back soon with cash assistance?
Yeah, so just so folks know, I mean, as I talked about earlier during the What's Up phase, I think a lot of us, in reaction to what happened in Washington, D.C., and when I say D.C., I mean Congress, Fannie Mae, Freddie Mac, FHA, we've imposed some restrictions. So we actually had to shut down our Fannie Mae program. The reason was that Fannie Mae was refusing to buy loans that were in forbearance. And given the fact that a borrower has a right to simply pick up the phone and say, I want a forbearance, there's a lot of risk on lenders, a lot of risk on mortgage-backed security issuers, and on investors because of that forbearance right. And so we have been unable to, for a short period of time, manage that risk. So we suspended the program. And yes, we had our lender advisory that Karen was on yesterday, and we are about to reopen our Fannie Mae program with cash assistance, which gives folks access to the conventional market. And we're about to loosen our credit overlays in terms of helping, because we've heard so many, going back to what Rachel said, we've had so many emotional stories from borrowers who said, I have been working for years to get to what you said the credit requirement is, now you've changed it. So the good news is, hopefully tomorrow, lender notice, Fannie Mae back open with New Hampshire Housing, and the credit overlays are going to be gone away. That said, lenders and us have all put in place prudential practices of really making sure that borrowers will have income and employment and asset stability through the process of closing. So borrowers, if you're listening, you should know that you're going to get verbal verification of employment 2 days before the closing. Some are actually doing it at the closing. So I think we were all looking for what are those ways to manage the risk. So that's a very specific question, and there's your very specific answer. Hopefully by tomorrow, give me a call.
Yeah, but they got the right answer, so that's what counts. Here's one that's, we've talked about condos, we've talked about single family homes, manufactured housing. Here's one that's even more interesting, specific. Is there a market demand for tiny homes? Would anyone want to handle that one? Or is that, I guess not.
I was going to say, I think there would be a market for it. I don't personally, I haven't had any experience with selling one, so I don't want to speak in an area that I'm not aware of. But I think again, the challenge with developing tiny homes is the land cost and the development cost, and again, that ties into other issues that are not really for this webinar, I guess. But I think there would be a demand if we could truly price them where they need to be priced.
Yeah, and as the finance guy, and Karen and I have worked on, which is called manufactured housing. And the reason I bring that up is the key to the entire real estate market is liquidity. And liquidity means you've got a lot of investors willing to buy mortgages or mortgage-backed security, which gets your rates down low. When you change the property type, it is really difficult to access that liquid market. And Karen and I and the Loan Fund and others across New Hampshire have been working for years to get manufactured housing, which has been with us for years, into that liquid secondary market. That's been tough. My personal opinion is if you were to introduce a new property type, you certainly would not have access to the liquid market, and people would be paying significantly higher mortgage rates, which might be fine. For some people, paying the higher interest rate, financing it with cash may be a good way to go, but from an overall large solution, to right now, the infrastructure on the financial side is just not there.
I think I have time for at least one more. This, I think, is going to have to go to Rachel, because you're a former president of the Realtors Association, I believe, right? Okay, so I'm not giving you anything you might not know. Is the process of getting a real estate license going to change? Currently, only 2 classes are allowed to be taken remotely. The rest must be taken in person. Do you foresee this changing soon for those who want to move into the industry and get their license?
So I think the Realtor Association is always looking forward to how do we serve members, how do we serve the public, and yes, I do believe, as a matter of fact, from a myriad of different instructors, I get emails, and I have seen more and more and more Zoom classes with different offerings. So I believe that there's actually more already available. I do believe more will come. You know, this is kind of breaking ground time in so many ways, right? I mean, not only are realtors going to need online classes, but, you know, insurance agents and everything else. So I do believe there's many more courses online than just a couple. Actually, I'm quite sure of it. Will the requirements change? Absolutely not. I don't see that happening. Actually, I was president in 2017 and put a task force together to really look at our continuing education requirements. Actually, Governor Sununu signed a law to change some of that from the task force that I formed. So requirements changing, I don't see happening. How you can get those courses, I absolutely see happening.
So Jeff, just in 30 seconds, I will tell you the other thing that COVID has changed for all of us, and I know Karen will agree with this, having to have remote work through the whole chain of real estate finance is important, and working on e-signings and e-closings. I heard someone who did a refinance, and they met in a parking lot, and somebody with gloves passed papers in between. So Rachel's right. I mean, we need to change the process so that it can work in all environments. And I know a lot of that is being done quickly during this time across the board.
Yeah.
Okay, I have this one last one. I hope it's not a bummer kind of a question, but I think it's kind of interesting. It's philosophical. Given the current lack of inventory, would an increase in foreclosures initially benefit the housing market? At what point would that become harmful?
I'm going to go back to Rachel's thing, which is to tell folks that, number one, losing your home is a horrible thing. Let's just make that clear. And during the last recession, New Hampshire Housing, with the state of New Hampshire, Department of Justice and banking and housing counselors, ran a campaign called Home Help New Hampshire. And the best summary I heard was foreclosure is a familial, community, and state challenge. And I think, yes, there were winners in the foreclosure process, but I think all of us really should be working to how do we prevent foreclosures, because it's just too devastating for people. It's too devastating for the market. So a lot of our recommendations to the governor in terms of COVID relief is how do we hold the market up so that we can get through this back to more stability, because foreclosure is not really good for anybody. And, you know, not just the people, but economically it's bad because of loss of value. And it's just not a good thing at all. So.
And I fully agree with that.
Yeah, it wasn't very long ago when we were going through record foreclosures. Is just a decade or so ago, and
Yeah, I would say
Very
2012 to
unpleasant
2015, we had this robust effort to try to help people avoid foreclosures, and a lot of families lost their homes, but a lot of families did graceful exits of turning keys in for cash. It's just not a good thing for the economy, not a good thing for people.
Yeah.
Not at all.
It's good for the state overall.
Not good for the state, yeah.
Very good. Well, I appreciate you answering that way. Because seriously, it was a horrible time we went through, and it really wasn't that long ago. Anyway, well, I guess our time has come to an end, and I really have to thank you all, Rachel Eames, Ignatius McClellan, and Karen Mayran. You guys have been great. This has been a great webinar. I know I learned a lot. I hope everybody out there did too. Once again, thank you very much for tuning in. Thank you very much for taking part, Ignatius, Karen, and Rachel. And if you have any other questions, I guess send them in, and I could try to get them to everybody. But we'll see what happens. But I hope you all stay well, be safe, and thanks again.
Thank
Thank
you.
you.